Disclaimer: the following content is for informational purposes only and does not constitute legal, financial, medical, or official advice. These stories are news and analysis, not advice. Any decisions should be based on your own research and professional guidance. July 6, 2026. Fintech's AI revolution. Trust emerges as the new digital currency. A high-tech renaissance is underway in finance and fintech as artificial intelligence transforms everything from investing to lending. Industry leaders say the winners of this AI revolution will be those who master an age-old element: trust. At a recent New York Financial Forum, a top bank chief investment officer likened today's upheaval to a creative destruction, where AI is the rocket fuel accelerating fintech into new orbits, but where trust is the gravity holding the system together. Financial startups and banks are deploying advanced AI for tasks that once took analysts weeks or months, like risk modeling and loan underwriting, and compressing them into near real-time solutions. Yet, even as machine learning becomes woven into every facet of digital finance, experts stress that human relationships and robust, trustworthy infrastructure remain mission-critical in this new frontier of financial technology. Forbes. McKinsey. A new industry survey underscores why trust is the hottest commodity in today's technology-driven finance sector. The majority of affluent investors, even those who actively use AI tools, still rely on human advisors for their biggest financial moves. In one survey, only about 7% of U.S. high-net-worth investors said an AI was the most influential factor in a recent investment decision, whereas nearly 60% credited human professionals for their last big idea. This trust gap is prompting fintech firms to bake compliance and transparency directly into their platforms, an approach insiders call governance by design. Major players like Fiserv and FS, which power core banking systems around the globe, have launched AI-driven banking platforms that streamline tasks from loan processing to fraud detection. These systems are built from the ground up with strict regulatory guardrails and human oversight in mind, ensuring that while AI speeds up transactions, it won't run wild. Even digital-first banks such as Chime are demonstrating that AI can boost efficiency and customer experience simultaneously when used responsibly, leading many to conclude that in fintech's future, transparent AI must go hand in hand with trust. Forbes. For the fintech and financial services sector, the takeaway is that technology alone isn't enough. Human-centric trust is crucial. Just as space agencies rely on tried-and-true guidance systems even while rocketing into unknown cosmic frontiers, fintech companies are realizing that AI works best when paired with reliable, trusted human judgment. By automating repetitive tasks, intelligent software is liberating financial analysts and advisors from drudgery, allowing them to focus on relationship building and strategic decision-making that software cannot replicate. This synergy of AI and human expertise holds immense promise. Imagine more inclusive banking services, personalized financial advice for millions, and lightning-fast transactions that still feel secure and people-friendly. As fintechs shoot for the stars with soaring valuations and innovative products, trust has truly become the new currency, ensuring this space-age leap in finance remains anchored by transparency, user confidence, and hope for a more accessible financial future. Forbes. July 6, 2026. Digital Currency Showdown. US and Europe duel over the future of money. A global contest is heating up over the future of digital money, with the worlds of finance, fintech, and DeFi converging on radically different visions. On one side, the United States is championing a market-driven approach, promoting private stablecoins issued by tech firms and fintech companies rather than creating a government-run digital dollar. In fact, U.S. lawmakers recently moved to block the Federal Reserve from launching a direct-to-consumer central bank digital currency, CBDC, until at least 2030, signaling a preference for Silicon Valley-style competition over state control. Meanwhile, Europe is taking the opposite path. The European Central Bank is racing to develop a digital euro for everyday use, supported by regulations that give traditional banks a head start in issuing digital money. Even China has doubled down with its heavily centralized digital yuan (ECNY), putting public institutions squarely at the center of its digital payments infrastructure. This transatlantic and international split, open market innovation versus central design, has pundits calling it a new kind of space race for the Internet of Money. Europe and China diverge from the US. On the future of money. The stakes in this digital currency duel are enormous. Trillions of dollars in transactions could ultimately flow through whatever model wins out, possibly shifting the balance of economic power in the process. Stablecoins, cryptocurrencies pegged to traditional currencies, have exploded in use, with annual stablecoin transaction volume already estimated around $35 trillion, though only about 1% of that represents real-world commerce thus far. To capitalize on this growth, even legacy payment giants Visa and MasterCard are reportedly co-developing a new USD-backed stablecoin to challenge current leaders Tether, USDT, and Circle's USD coin, USDC, which together comprise roughly 80% of a $325 billion stablecoin market. At the same time, over-regulating digital currencies carries its own risks. If Europe's digital euro and similar projects move too slowly or protect incumbents too tightly, some experts warn they could hinder the euro's global competitiveness, leaving an opening for dollar-linked private cryptocurrencies to dominate global online commerce. Already, roughly half of all USDT stablecoin transactions now occur on the Tron blockchain, a network with no US jurisdiction, effectively placing a large chunk of the world's dollar-pegged digital value beyond American regulators' direct reach. This illustrates how decentralized finance can route around borders, adding urgency to the policy debate. McKinsey. Forbes. Europe and China diverge from the US. On the future of money. +1. For a tech-savvy fintech and crypto audience, this clash of approaches is more than a regulatory tug-of-war. It's a battle to define the monetary universe of the future. Money is becoming code, and the choice between a free market model and a centralized model will shape how people and businesses transact across borders and even in space. Imagine paying a Martian colony in digital dollars versus digital euros. Optimists argue that healthy competition can spur innovation, leading to cheaper, faster cross-border payments and new SaaS financial services that benefit consumers and entrepreneurs globally. Pessimists worry that fragmented approaches could create parallel financial systems and new risks. Either way, the outcome of this digital currency showdown will ripple through tech and financial markets worldwide, influencing everything from startup investments to how we buy our morning coffee in a cashless society. In this new frontier, the currency that wins online could define the next generation of global commerce, making the race to innovate in decentralized finance one of the most closely watched tech financial stories of our time. Europe and China diverge from the US. On the future of money. July 6, 2026, AI titans enter the courtroom. Legal tech faces a high-stakes reckoning. The normally cautious world of legal tech and compliance is being jolted by a wave of new entrants straight out of big tech space. In the past week, frontier AI companies like Perplexity AI and Anthropic announced major pushes into legal services, signaling a dramatic shift in how technology sees the law. Perplexity officially launched a cloud-based computer for counsel platform just days ago, which deftly marshals over 20 cutting-edge AI models to assist law firms with research and drafting tasks. Unlike traditional legal software that merely archives case law or automates forms, these new tools treat law as just another data layer in their quest for general artificial intelligence. Even tech giants like Microsoft and Google are integrating AI-powered legal assistants into their enterprise suites, aiming to make legal research and contract analysis as routine as a spell check. For an industry used to meticulously slow adoption of technology, watching these AI motherships descend into the legal arena has been breathtaking. Forbes. Tech Times. This incursion by AI titans is forcing a high-stakes reckoning among incumbent legal tech firms and compliance software providers. Specialized startups offering contract review or case analytics, once the darlings of the legal industry, now face behemoth competitors with virtually limitless data and budgets. Notably, established legal AI players like Harvey AI, Valued at over $10 billion, and longtime giants Thomson Reuters and LexisNexis are being challenged by the likes of OpenAI, Anthropic, and even Apple, which reportedly see legal services as a logical extension of their knowledge platforms. Analysts note that for decades, legal tech tools aim to make lawyers more efficient without replacing them, for example, by helping find documents faster or flag contract issues. But now, the goal of these external AI entrants is to deliver a more capable general intelligence that can perform a broad spectrum of legal tasks, from research to drafting to compliance checks, all within unified AI-driven platforms. This new paradigm effectively takes law out of its silo and places it inside a larger multi-domain AI ecosystem. While that promises greater productivity, it also raises pressing questions about data security and ethical compliance, especially as some of these AI models are already facing legal challenges of their own around data sourcing and intellectual property. Forbes. Tech Times. For lawyers, compliance officers, and tech-forward enterprises, this trend is both exciting and unnerving. On one hand, the blending of AI and legal tech could democratize legal expertise, making routine legal advice and document drafting faster and more accessible. Perplexity's new platform addresses one key concern up front. It links every answer to original sources, so lawyers can instantly verify case citations and avoid the pitfalls of AI hallucinations that plagued early adopters. On the other hand, if general AI platforms make legal analysis just another feature, traditional legal tech vendors may need to rapidly evolve or risk obsolescence. Still, there's reason for optimism in this frontier. The future of legal tech is likely to be a collaboration between human expertise and AI, where attorneys leverage these powerful tools to focus more on strategy, advocacy, and client service. With careful ethical guardrails and human oversight, the integration of AI into law could expand access to justice and improve compliance for businesses and individuals alike. A win for the rule of law even as we boldly venture into uncharted tech territories. Tech Times. +1. Forbes. July 6, 2026. E-commerce innovator goes vintage. AI helps a sneaker giant reshape retail. In e-commerce and retail tech news, one of the world's top online marketplaces is boldly embracing the booming second-hand economy. Digital sneaker exchange StockX just launched a new feature called StockX Listings to let users buy and sell used sneakers and vintage streetwear directly on its platform. To make this work at scale, StockX is leveraging AI for instant photo analysis and pricing guidance, so sellers can snap a picture of their kicks and get an immediate recommended price range based on market data. Initially, sellers even get to keep 100% of their sales, no fees, as the company jumpstarts the service. After a limited pilot with select resellers, StockX is rolling these features out to all U.S. users and then globally, ambitiously expanding its marketplace beyond brand new goods. It's not just a new feature, it's a new business model, according to a company executive, as re-commerce, resale commerce, moves from the fringe to the mainstream. Retail Dive. StockX's foray into vintage and used goods signals how technology and shifting consumer habits are reshaping modern retail. The resale market is surging, especially in categories like sneakers and apparel, where collectors and eco-conscious shoppers seek sustainable, affordable finds. Traditional e-commerce players have taken notice. Arch-rival eBay has rolled out its own authentication services for streetwear and even acquired a popular resale app to woo young vintage enthusiasts. Industry reports project the U.S. second-hand apparel market will reach nearly $79 billion by 2030, growth fueled by trends like social media-driven thrifting and concerns about fast fashion's footprint. StockX is also adding community features. Its upcoming StockX Live will enable real-time auctions and social shopping, turning resale into a lively event. And in a twist of clicks to bricks, the Detroit-based startup just reopened a physical store in New York's Soho, reflecting how even digital native retailers see value in omni-channel connections. Retail Dive. For retail tech entrepreneurs and SaaS innovators, this story is a testament to the power of adaptation and innovation in e-commerce. By harnessing AI to ensure trust Through quick image-based verification and pricing transparency, companies can scale peer-to-peer marketplaces in ways unthinkable a decade ago. Shoppers benefit from a more frictionless experience. Imagine instantly knowing the fair market price of those limited edition sneakers hiding in your closet. Sellers win too. AI-driven listing tools save time and open up a truly global bazaar for secondhand goods. This optimistic trend suggests a futuristic, circular economy in retail, one where products live second or third lives, reducing waste on Earth even as we dream of colonizing new worlds. In this wave of retail innovation, AI isn't making shopping impersonal. Instead, it's enhancing trust and personalization in online marketplaces, proving that technology can bring consumers closer together over shared passions. Whether it's rare sneakers or retro fashion, across both physical and digital realms. Retail Dive. July 6, 2026. Major U.S. government hack spurs new urgency in cybersecurity and risk management. A stark reminder of the challenges in cybersecurity and risk management emerged as the U.S. Department of Homeland Security, DHS, disclosed it is investigating a significant cyber breach of a government information sharing system. The target was the Homeland Security Information Network, HSIN, a critical platform used by federal, state, and local agencies to coordinate intelligence and respond to major events. According to DHS statements and reports, hackers penetrated SIN servers in late May and early June, potentially exposing sensitive law enforcement data. Although HSIN carries unclassified information, it is often highly sensitive. Indeed, officials noted the system was supporting security for the large-scale World Cup events currently hosted in the United States. The breach, which echoes the breaches of several federal systems over the past year, has raised alarms about the government's cyber defenses. One senior U.S. senator warned that even unclassified intel leaks from such networks can carry national security risks if they compromise how authorities protect the public. TechCrunch. This high-profile incident casts a spotlight on the escalating cyber threats facing both government and private sector networks. Observers point out that it comes after a period of budget cuts and reorganizations in federal cybersecurity programs, which may have inadvertently widened the nation's cyber attack surface. Meanwhile, attackers are growing more sophisticated. Recent reports highlight new vulnerabilities like the Blue Hammer, exploit used in ransomware attacks and massive data breaches, exposing millions of user records in Japan and elsewhere. These developments underscore the need for robust risk management strategies, including upgrading legacy systems and adopting advanced protective technologies. On the brighter side, cybersecurity experts are responding by pioneering AI-driven threat detection, zero-trust architectures, and international cooperation to outpace the hackers. For a tech-forward audience, the lesson from this breach is clear: cybersecurity is everyone's business. Just as a spaceship crew must constantly reinforce their hull against the void of space, companies and governments must continuously fortify their digital infrastructure to thrive on the new frontier of cyberspace. This breach may serve as a wake-up call, ultimately driving innovation and investment in next-gen cyber defenses to keep our interconnected world safe. TechCrunch. Video description. In today's episode, we journey through 5 groundbreaking stories at the intersection of tech, SaaS, and finance. First, we explore how AI is transforming the fintech world and why building trust has become the secret ingredient to success. Next, we dive into the global showdown over digital currencies as the US, Europe, and China take very different paths to the future of money. Our third story reveals how AI giants are shaking up the legal industry, pushing traditional legal tech players to adapt in a high-tech race for relevance. Then we turn to retail, where a sneaker resale platform is using AI to tap into the booming second-hand economy, blending innovation with sustainable shopping. Finally, we cover a major U.S. government cyber breach that's raising alarms and driving new urgency in cybersecurity. Tune in for a tech-fueled adventure from digital finance to e-commerce and beyond, where every story sheds light on how cutting-edge tech is rewriting the rules of our economy and pointing the way to a hopeful, futurist future. SEO tags, tech news, SaaS, fintech, finance, Decentralized finance.